Okay, so a huge financial move just happened that's sending ripples across the globe. And honestly, it has massive implications for an entire continent. Let's get right into it and unpack what BlackRock's big bet on Africa is really all about. So this is the number at the heart of the story. $500 million. Let that sink in for a second. BlackRock, one of the biggest asset managers on the planet, has just committed this amount to one single investment vehicle focused on Africa. Yeah, it's a number that really makes you stop and pay attention. And that really brings us to the big question, right? What is this $500 million investment truly signaling? Is this just another Tuesday for a massive firm, or is it a sign of something much, much deeper changing in how the world invests? Together, let's try to unravel what this is telling us. To really get this, we have to start with the fact that this isn't just any investment. It's what's called an anchor commitment in the financial world. And that specific term, it's actually the key to this whole story. So what on earth is an anchor commitment? Well, think of it like the first most important piece of a giant jigsaw puzzle. It's that foundational investment that basically shouts to all the other potential investors, hey, we really believe in this, and we're putting serious money where our mouth is. It builds a ton of confidence, and, it de-risks the whole venture for everybody else who might want to jump in. And this is where the scale just becomes crystal clear. BlackRock's $500 million is the cornerstone for a much, much bigger fund. We're talking a target of $1.8 billion. So this initial commitment, it just instantly lifts the fund past its first huge milestone and basically puts the whole timeline on hyperdrive. Okay, so we know how the investment works, but where is all this money actually going? I mean, what does it translate to in the real world? Let's take a look. Right, so this isn't about some abstract financial product. The fund is targeting four very specific, very tangible areas. We're talking building out huge renewable energy projects, upgrading power grids between regions, expanding critical ports and freight routes, and also laying down the digital backbone, the fiber and data centers for new industrial zones. This is all stuff you'd call shovel-ready, real assets. Now, you gotta understand, a move like this doesn't just happen in a vacuum. It's actually part of a much bigger economic story, a really fundamental shift in how major infrastructure projects in Africa get funded in the first place. And here is the crucial bit of context. After that period of high global interest rates, a lot of governments across the continent are finding that their ability to just borrow money and fund these big projects is really limited. Their public balance sheets are squeezed, and that's created a pretty significant funding gap. This really shows the changing of the guard. The old way, the traditional model, it relied on governments borrowing money. But in this new model we're seeing, private institutional investors like BlackRock are stepping right in to fill that gap. They're financing specific assets directly. It's a much more targeted, private sector-driven playbook. All right, so with all of that context set, let's get to the heart of this. BlackRock's move is sending three incredibly clear and really important signals to investors all over the world. So, first up, it signals confidence. I bet this huge shows growing trust that these infrastructure projects are going to generate stable, long-term returns. Second, it shows appetite. Investors are actively hunting for these kinds of long-term assets in emerging markets. And third, and this one's a biggie, it signals acceleration. We're actually seeing private capital move faster and more decisively than some of the old-school development banks and international organizations. But at the end of the day, what does this all mean on the ground? Let's bring this whole story back from the world of high finance to the world of concrete, steel, and fiber optic cables. There's this quote from one of the fund's executives that I think just says it all. The focus here is on execution, not just drawing out plans. This money is meant to go straight into projects that are ready to be built right now, which could impact energy reliability, trade, and productivity almost immediately. So, as we wrap this up, the big takeaway is pretty clear. This $500 million commitment, it's way more than just a headline. It's a catalyst. The capital is now officially in place. So the truly fascinating story, the one we're all going to be watching for years to come, is what actually gets built with it.